Welcome to video number 2. This is the first step in understanding and implementing the e-commerce accounting workflow for Bulletproof bookkeeping. Now, inventory and e-commerce is not as complicated as you think. Yes, it's complex. There's the inventory itself, there's multiple distribution channels, there's tracking inventory at the right cost when a sale is made in the revenue cycle. So, you sell something and the inventory cost transfers from the inventory asset to cost of goods sold on the balance sheet. So it's complex in that there are moving parts, but it's not rocket science. Once you see how this is all laid out and done and how it's tracked in order to ensure maximum accuracy, then you'll see that the hoop you have to jump through here to learn this stuff is a lot wider than you probably think. Do you want to build an accounting or bookkeeping practice with e-commerce as your niche? In this video, I'm going to show you exactly how to get started doing just that. In the last video, I explained to you that the key to getting any set of books accurate is with something I call bulletproof bookkeeping. And then I discussed the fact that in the case of e-commerce specifically, the key going one level deeper is what I refer to as the e-commerce accounting workflow. I also shared with you that in the e-commerce accounting niche, there is very high demand for competent accounting professionals and very short supply of accounting and bookkeeping professionals who really understand e-commerce accounting. And that equals opportunity. To understand e-commerce accounting workflow, you have to understand an e-commerce business from the operational side and how that translates into the accounting workflow. The first thing the client does is they buy their inventory, right? They get on the phone or they go online, they purchase the products from their supplier, and then that inventory gets shipped to their warehouse, and the cost of that inventory goes into their inventory asset account. The next thing they have to do is start doing some sales and marketing to get that inventory sold. Once the inventory is sold, then a few things happen. The inventory at cost comes out of the inventory asset, goes into the cost of goods sold account. At the same time, you're recognizing the sale, what you sold the inventory, what you sold it for, and the difference between what you sold it for and that cost, which is now in cost of goods sold, is your gross profit. Right? So now the question is, how do we do this in such a way? How do we set up the accounting in such a way that the information on this aggregated across many, many sales is 100% or as close to 100% as we can get to being really accurate? The way that we make sure this is all 100% accurate is by focusing on the sales and the payment and starting off by thinking of these as two separate transactions. That's the first problem people get stuck on, is they think of the sale and the payment because in the real world they happen, instantaneously pretty much, but they're actually two separate things. First, I make the sale. Somebody goes onto a website somewhere and clicks and adds it to the cart, right? And then they check out and make their payment. So even though the two things happen simultaneously, to understand the accounting workflow, you really have to start thinking of the two as separate events. And when you learn to think of it that way, then the accounting workflow will make a lot more sense. And it's all based on one simple formula, which is sales minus payments equals 0. It's just that simple, and it sounds overly simplified, but rest assured, as I dig deeper into here as we go, you'll see why it's really important. If you keep that formula top of mind as we go through the rest of this course, you'll see how understanding that formula and thinking about it puts really important context on exactly how we handle the accounting for everything that we do, for every sale we make, for every piece of inventory that gets sold. So let's say that this month you had $100,000 in sales on Shopify, right? And let's say you accept Shopify payments and you also accept PayPal on Shopify. What this means, simply put, is that your $100,000 in sales in Shopify minus whatever portion of that was paid via PayPal and whatever portion of that was paid via Shopify equals 0. So $100,000 in Shopify sales minus the Shopify payments minus the PayPal payments equals 0. We have to start there, and this is why it's so important to think of the sale and the payment separately, because in this case, we really have two different payment methods that we have to deal with. Now, on a single sale, it looks and sounds simple enough, but again, when you're talking about aggregated sales of $100,000 over the space of a month, now it's a little trickier. right? We have lots of sales and lots of payments that make all that up, but you always want to start off by thinking of it in the aggregate, right? And again, that formula makes it really simple to follow the logic in terms of how we set up the accounting here. So we have the sales going into a Shopify clearing account. And then from there, the payment methods come in and they clear things out of that Shopify clearing into, whatever portion was PayPal goes into PayPal's clearing. Whatever portion was Shopify payments goes into the Shopify payment clearing. Okay. Now, because Shopify clears straight into the bank account when it's Shopify Pay, some people might be inclined to, deal with that transaction directly from Shopify clearing into the bank account. And you can do that, but if you do it the way I'm suggesting and put a Shopify payment clearing account in the middle of that, it becomes much, much easier to track and make sure that you haven't missed a single dollar of sales and that you haven't missed a single dollar of payments. Next, you have to remember that the amounts that you receive in your bank account are going to be net of fees, right? So you really have to think about how to get from the gross sale amount to the net amount that goes into your bank account, which is with the fees in between. And those fees, of course, have to get recorded as some kind of payment processing fees, which is what I typically call them. So in essence, you have to do with your gross sales minus your payments minus your payment processing fees to land on the final amount that's received in your bank account. So at the end of the day, you've got to be able to reconcile your bank account to the statement, which is going to show those net amounts you received, and then you reconcile your payment clearing accounts in between, and then you reconcile your sales clearing accounts, which would be, one each for your different sales channels. And that's really the secret to this, is reconciling all these clearing accounts to zero every month is how you make sure. It's impossible to get to zero by accident. The only way you get to zero is because you have in fact accounted for everything from the gross sale down to the net deposits received in your bank account. Now, when you think of this in terms of a single sales channel like Shopify, it sounds simple enough, but now multiply that by 2 or 3 or more sales channels, because a lot of you are going to have Shopify, eBay, Amazon, and some even will have, even though Shopify can, and in my opinion should become your website. When you do that, I know that there are companies out there that use Shopify as one sales channel, and then they also have a website with some other shopping cart on the back end, something like WooCommerce or something like that. So we have to realize that, at the outset, when we're thinking of a single sales channel, that helps us understand the logic and the flow. And you might think, oh, this is overly complicated. It shouldn't be. The reason is because, again, when you start multiplying the situation across multiple sales channels and multiple payment methods, some of which might overlap 2 or more of those sales channels, now it gets complicated, and that's why we need a good detailed workflow to make sure that we've captured everything and haven't missed anything. So to simplify and summarize, the sales come into a sales clearing account. Then they clear from the sales clearing into all the different payment clearing accounts for all the different payment methods that are accepted. Then we deal with the payment processing fees, and then the money clears from those payment clearing accounts into the bank account, where the money ultimately lands at those net amounts. This is what I call the e-commerce accounting workflow. And in the next lesson, I'm going to show you exactly how this gets set up in the chart of accounts in QuickBooks Online, and what the real big secret is in terms of how we ensure that all of this gets tracked and reconciled with practically a 0% error rate. As an exercise, between now and when the next lesson rolls out, I want you to think about this workflow. I want you to think about one of your own companies or your own clients, if you're the accountant or bookkeeper. Think about the different sales channels that you have, and I want you to map it out. Use a flow charting tool or do it with pen and paper. I don't care. I just want you to be able to really visualize what I'm talking about here. So between now and the next lesson, I want you to sketch it all out. What are your sales channels? What are your payment methods? How do they link up? And then just link the payment methods down to the 1 or 2 or however many bank accounts things clear into from the various payment methods. If you have all that sketched out for your own situation, first of all, just going through that exercise will solidify everything I've just shared with you. It will start making a lot more sense, and then you'll understand that this informs exactly how we're going to set up your chart of accounts, which, as I said, is what I'm going to show you how to do in the next video. In the next video, I'll show you how I sketch it out using a pretty cool tool that I like to use for exactly this sort of thing. It's called the brain. And then we'll get into, as I said, how to set this all up in your chart of account. And you'll see that this is my big secret. Of course, in the course, I'm going to go a lot deeper and into much more detail on a lot of this stuff. And I'll even show you things like how to usurp the apps when you need to so that you can get your sales data directly into QuickBooks Online if necessary, because sometimes the apps don't work or you're caught in a support loop, and while you're waiting for answers, you still need a way to get your sales data in there so that it stays up to date in real time. And then there's a whole section in the course that deals with inventory management with at least 5 modules, could be more by the time I actually launch the course. So that's the whole other piece to this, which we'll cover also later on in this mini course. In many ways, inventory is the easy part, right? You buy the inventory, it goes into a warehouse, it's sitting as an asset on your books, and then you sell it, and it moves from the shelf in the warehouse out to the customer, and in the accounting, it moves from the inventory asset to cost of goods sold, and as I mentioned earlier, you compare what you sold it for with that cost of goods sold, and you have your gross profit. Now, of course, inventory can get infinitely more complex, which is why we reach a point in many cases where we really need a whole separate tool to manage the inventory because it's more complex than QuickBooks Online can handle. The beauty of working in a product like QuickBooks Online is there are lots of apps in the ecosystem that link up beautifully to QuickBooks Online so that they do their job well while QuickBooks Online does its job well. And the bottom line is you have your inventory managed and you have a good general ledger system where you can run your reports with great accuracy. So the basic inventory workflow is pretty easy to follow, and while it does get more complex than that, it's easy to follow as long as you understand the basic flow. Buy the inventory, store it, sell it, take it out of storage, ship it out to the customer. Then the complexities just make us go a little deeper in a few different areas of that, but that's the basic layout of the inventory workflow. So once again, in the next video, I'm going to go deeper on all this. I'm going to show you how we set it up in the chart of accounts, and then I'm going to show you the complete plan for how this all comes together between what I referred to as the revenue cycle as well as the inventory management piece, so that you really have a clear picture of what this all looks like when you're setting up and then maintaining a set of books in QuickBooks Online for an e-commerce company. I'll see you in the next video.